Good morning, everyone. Welcome to What Would It Cost? And we're really looking forward to hosting our two guests here today, as they're absolute experts in the pre-construction area of the real estate market.
Yeah, absolutely. We're excited to give you all the insight on pre-construction with our two guests, David Peruzza and Christian Scavone. Welcome, guys.
Thank you very much for having us. I'm David Peruzza. I work at Royal LePage Citizen Realty, and I am the managing partner at the Foundation Group Real Estate team. Been in real estate for about 16 years.
Right on.
Yeah, and just to echo exactly what David said, my name is Christian Scavone. I'm with Royal LePage Your Community, the Tyler McClay Realty Group. Coming out of a strong business background, I got into real estate just to serve the whole new generation of buyers that are coming to market.
Amazing.
Awesome.
All right, so just to get right into it, the way the market's going right now, why pre-construction over pre-existing?
So just to start you guys off with why pre-construction, mainly me working with a lot of first-time home buyers and investors. One thing I like to point out is in this transitionary market, previously, pre-construction, it was very difficult to have that full experience, that client experience, which I like to give to my first-time home buyers. So what we saw during that hyper market was people had to act very fast. And so they didn't get the full experience, whereas now you can take them to the sales center, they can choose their floor plans. So just right off the bat, my first-time home buyers who are considering especially condos, they get much more of a five-star experience with pre-construction. And another big thing too is right now the builders, they have to get creative, they have to get innovative because there's so many projects coming to market. Last year, when there was a crazy market, they didn't have to be innovative because they would sell out so fast. So I think why pre-construction now is because you're getting so much more out of these projects because they're so innovative. So you have the crazy tech and the crazy designs and these architectures from all over the world coming to design these massive projects.
Right.
Yeah, I agree. And I think too, just with pre-construction, your barrier to entry is a lot less than it would be on a resale purchase. I think the biggest advantage is your mortgage and your financing and lendability. You don't need to qualify for a mortgage close on a mortgage right away. And number two, you don't need to come up with a huge deposit up to 20% within 30 to 60 days of purchasing. Right. The beauty of pre-construction is that your deposit structure is amortized sometimes over 2 years in smaller chunks and smaller increments. So it allows you to save that money and put it towards your initial total deposit without having to necessarily close or register a mortgage until the project is actually built and completed.
Right.
Yeah. And what I'm also finding very, very interesting is not only for the first-time home buyers and price of entry and this deposit structure, that we speak of and helps them get into the market and start building out equity and real wealth. It's also something that for savvy investors that are scaling a portfolio has become quite popular to flip these assignments. So let's talk a little bit more about what that started to look like in your world and what you've seen in regards to the profits made in the short periods of time, and what are some common strategies that you've seen from your investors?
For sure.
I think the two type of investors really determine which way you're going to go with it. So you have the one type of investors where they are holding on to it. And in that case, it's more of a long-term gain. Yeah. And that's where it's important to make sure that they have a good tenant in there and they're leasing it out. And the great thing about these new pre-construction projects are rentability is just so high. Right. So they know they're going to get someone in there right away. And then the second pool, which is the people who are there to flip, that's where assignments become very important. And just to add a second piece in there too, it's super important to have that right to assign. And we are seeing that in the past year, the few years, that there's been a lot of profits made because of how much growth there has been, especially in specific pockets throughout Ontario. You see Hamilton, you see Pickering, Toronto, Barrie. People have done extremely well in those markets because they bought at a great time when there wasn't as much infrastructure. And then over the years, during the time that it was being built, so much infrastructure came, so much business came, and that just obviously explodes the value of real estate. Right. And then another big thing too with the assignment sales, again, you're kind of getting that discount when you look at a market value perspective. So it's a different pool of buyers that we're advertising to, whether it's on MLS or exclusively these assignment sales. But those pool of buyers, they tend to be cash heavy buyers, but they end up getting a great deal on these assignment sales because once those units do hit the market, they do increase in value. So it's kind of a benefit on both sides. The people who bought the pre-construction, they're making a profit because they're now selling it on assignment. But then on the other end, the buyers, they're also kind of getting an advantage because maybe they missed the the time to buy it during pre-construction, but they're not going to get it before it actually closes and hits the market.
Yeah, I would certainly agree with that. Part of the advantage of buying pre-construction is you now have availability to all of the initial builder incentives, one of which is oftentimes the right to assign, and oftentimes that we're seeing now at zero cost. You may have to pay the lawyer fees or the administrative fees. So it's going to cost you nothing to assign that in 2 or 3 years once that project is ready to be completed. But you do need to be mindful of the fact that the builder only will allow you to assign within a specific window, sometimes 30 days, sometimes 60 days or 90 days prior to the building being closed, at which point you then need to engage with a realtor who is very savvy and very educated and experienced in assigning units, because then they have to go out and find a buyer for you before you have to close on the property. Secondly, there's a lot of marketing restrictions around assignments. So as a realtor, you want to make sure that as an investor, you want to make sure that you're working with a pre-construction expert who has access to people actively looking for assignment deals, because you can't post an assignment on MLS. You can't do any social media advertising with assignments. There's a lot of rules and restrictions around that. So those who assign and who have done it before often have a very tight system in place, which they are aware of their timelines, they're aware of their restrictions, and more importantly, they're working with people that can actually get them that unit sold, and then they can take advantage of the lift in value, whether it was over 2, 3, or 4 or 5 years, and then cash out, and they move on to the next one.
Right.
Yeah.
Right. Tell us some of those success stories. some of the bigger profits you've seen made.
Well, listen, over the last 3 or 4 years, even if you look back 6 or 7 years ago, when you can buy pre-construction under $1,000 a square foot, significantly under $1,000 a square foot, and then look back, 2, 3 years ago, the average price per square foot Q1, Q2 of this year on pre-construction in Toronto was about $1,500 a square foot. So you're buying sub $1,000 or even at $1,000, you're making a significant lift on that initial purchase just by investing and just by holding on to the property until it was built. So, to be honest with you, Nick, I've seen people double their investment. I've seen people, 50, 75% lift on whatever their investment was just on holding on to the property and waiting for it to be built. Yeah.
Awesome.
It's amazing.
It's an interesting strategy for sure.
Yeah.
Awesome. Well, that's amazing to hear. We're going to take a quick short break, and when we get back, we're going to talk about the risks of pre-construction.
We take care of everything. Well, almost everything. Our mortgage agents are dedicated to propelling your financial goals. Spark Financial Group, where finance creates freedom.
Welcome back to What Would It Cost? We're here again with David Peruzza and Christian Scavone talking all things pre-construction. And guys, what the viewers really want to know is what's the risk, especially in the current market we're going into. And just like everything we see in the housing market with mortgages, rates going up, is all that fear mongering. So we want to hear from the pros. What's that risk they're looking for? Are projects not being built? Are they going to increase prices because development charges are going up, or the cost of actually building is going up? So touch a little bit on that.
Mike, you sound a little bit like CP24. I'm getting worried about you. And my point there is that, I think the mainstream media does a very good job of fear mongering. That's what sells and that's what gets their advertising dollars up. But at the end of the day, I think it's incumbent upon Christian, myself, and other realtors and that like and enjoy selling pre-construction to really kind of mine through the data and look at what's really going on. So the fact that projects get canceled, yes, they do, but they account for such a small percentage of the projects that actually get built that your risk of investing in a project that will get canceled is very low. We can't say it will never happen because we don't have a crystal ball, but at the end of the day, the risk is very low. The reality is that after we came out of the pandemic, I should say prior to and during the pandemic, with supply chain issues, the increase in material costs, builders who had launched projects in 2020, even 2021, were not factoring these massive increases in labor, in building costs and material costs into their costs per square foot and what they actually sold for.
Right.
So builders will not build at a loss. We know that. Builders will not build to break even. They're in business to make money. And so when their only solution is to cancel, it's not because they want to. It's because they have to. It's because they can't build at a margin that they're comfortable with. But the reality, I think, and Christian, I'm sure you'll agree, is that builders today understand now what today's costs are, what the inflationary impacts on those costs are going to be today and even within the next 2 or 3 years. And they're building those costs into their pricing, their launch pricing today. So the risk of that is even less. That's what I've been seeing in some of the, and in hearing in some of the conversations with builders and developers. I'm not sure if you've been experiencing the same thing.
Yeah, no, exactly what David said was pretty spot on. The big thing, or the two big things I would say is, developers and location, specifically with developers. Like, as David said, they have a full team that's forecasting these costs. They're taking into all the macroeconomic factors. They're forecasting inflation, and have a huge breakdown to make sure that that's all priced into the price per square foot or that starting price list so that they do make a profit at the end of the day.
Right.
And so a lot of the big developers, they have the business infrastructure, whether that's human capacity or the technology or the capital to do all this. And that's why we always say, go with a trusted builder. Of course, there are newer builders that do come to market. Make sure they have the experience. They've shown that they've done projects of this caliber. And again, they have the back end to support everything that David said.
I totally agree with that.
Yeah.
And I think that's one of the things that, when we provide counsel to buyers and investors, it's, obviously we're looking at location,
Right.
But number 2 on the priority list is builder reputation. Mm-hmm. And there's a lot of ways that we can research who these builders are, whether or not, they've canceled projects in the past. We always encourage our buyers to go in and check, previous projects that they've built. Do you like what it looks like? Do you like the finishes? Would you be comfortable in living in a home or a building that looks something like this, right?
Yeah.
And so, it's one of those things that I think, again, back to my point earlier, the media does a good job of focusing on and spotlighting because, it's a big headline. But the reality is the numbers don't really substantiate what they're claiming at the end of the day.
Yeah. Hence, work with a pro and always make sure to have those experts, that you're surrounded by when making these style of investments or any investment for that matter. Because you guys really help navigate them into the right areas that maximizes the potential of their yield at the end of the day, right? And
Absolutely.
Everyone's busy doing what they got to do, making money, with how it is they know how to make money, and this is what you guys are pros at. And just that time and that headache that they save alone, let alone the money, is all worth it, right? We say it time and time again. So yeah, good on you boys for always putting your customers in the right projects and having it be that it's nothing but success stories at the finish line, right?
Yeah, absolutely.
Yeah, no, absolutely. And funny you said that too with us being, pros. It's also the type of advice you give to clients. Whether they're a sophisticated investor or they're a first-time home buyer, I still strongly emphasize to them, have a lawyer review the APS, the Agreement of Purchase and Sale. Make sure there's nothing in there that, puts the builder at a huge advantage and puts the buyers at a disadvantage. So that's just something to touch upon that I think every single person should.
Yeah, I
do.
totally agree with that because, quick little horror story we had. It was a client, bought a property, pre-construction, it was 4 years, got built, got the mortgage approved, everything was done, came on closing this, a couple months ago, and she got hit with all these fees. This was for the pavement of the driveway,
Right.
and whatever else they added in there. And she's like, well, how am I supposed to get the money for this? And I said, well, the mortgage is going to be for what the purchase price is. We need to go back and review. And she had her new lawyer that did the closing for us say, did you review this with the lawyer before? I didn't. So just to emphasize on your point, I think, it's huge that people think just, put your $5,000 or $1,000 deposit, let's get it in. No, read everything in that contract because you don't want to be burned at the end. Then, she had to come up with around $20,000.
Yeah. And that sounds like an example of a low rise or a detached home that was built.
Yeah.
And a lot of that is often found in the fine print, in your agreement, right, and in your documents from the builder.
Right.
They provide full transparency. They'll tell you exactly what costs you're on the hook for. But if you don't know to look for it,
Exactly.
and have
Those
someone
things
on
are
your
60 pages.
Yes, yeah.
Or 100.
yeah, they're very comprehensive, and I mean, I will not work with anyone if they don't have a lawyer review the deal. We can provide as much advice and expertise as possible, but if they don't have a lawyer looking at it, it's a risk on us as well, right?
Exactly.
And if it does come back to backfire, or there's a problem at the end of the day, it obviously looks bad on us when that happens, and that's just generally not how we operate our business.
Right.
Yeah.
Right on.
Absolutely.
What would it cost? What's that chunk of change look like that they have to move into the project with, and what's that amortization period in regards to the structure, and then most importantly, what do you guys look for with your financial partner, and how you get your clients to the finish line?
Yeah, so I think just like high level, the three big costs obviously is the deposit, which I'll get into, and then the interim occupancy costs, and then closing costs. So those are like the three big things that we always talk to our buyers and investors about. Yeah. The deposit structure, it honestly varies from project to project. Mm-hmm. It's hard to pinpoint exactly what that deposit structure is going to look like in terms of amortization and timelines. You have some that are as little as under a year, and some that I've seen up to 2.5 years. It really just depends on the developer and the builder. Typically, they do add up to 20%, but sometimes we do find that there's some incentives where they do less than 20%. And then moving on to the interim occupancies. So once all of that deposit stuff is done and it's out of the way, then the project gets built, and then there's a point in which the developer allows the buyers to occupy the units or the right to lease it. And then during that time, so when that happens until when the property closes, there's something called interim occupancy. And not to get super technical, but that's just a bundle of costs that have to do with taxes, so your percentage of taxes, your maintenance costs, and then a little bit of portion of that interest on that remaining balance. That's typically what you can expect with a common maintenance cost. Mm-hmm. So anything that you see on MLS, that typical maintenance cost you'd have with condos. And then at the very end, you have the closing costs, which is essentially your legal fees, your land transfer tax, and the whole shebang, as you guys know, title insurance. Am I missing anything, David?
Yeah, the closing costs, you can often budget anywhere between 1% to 3% of the purchase price. Land transfer tax is definitely a big one because you get double taxed if you're buying in Toronto. Yeah. You've got your municipal and your provincial tax. Mm-hmm. If you're buying outside of Toronto, it's just the provincial tax. That's broad strokes numbers around 2% each way for that tax specifically. Right. So you have to know that for sure, because that's a big line item on your closing statements and statement of adjustments. And then I think you've covered it perfectly. Your lawyer fees and things like that, but the part about the financing, Nick, that you brought up, and the step that the role that you guys play in this process doesn't happen at the end. It actually happens right at the beginning, or it should happen right at the beginning. Yeah. And I say that because to Christian's point earlier, the developers do a fantastic job of putting together beautiful marketing presentations, and they create these amazing sales centers. Mm-hmm. And a lot of people just kind of get caught up in the hype and don't actually think about the numbers. Yeah, can I afford this? And can I afford this is the big question that we have to ask them, from the beginning. And if they haven't engaged, the bank or a mortgage agent yourselves already, we have to address that, because they may have the money in the bank, but will they get a mortgage in 3 or 4 years? Mm-hmm. And builders require now, usually within 30 days, sometimes within the 10-day due diligence period, a letter. Mm-hmm. It's not a mortgage, it's not an approval, but it's a pre-approval or a commitment letter stating that buyer X will in fact be qualified for a mortgage on this purchase price when it is built. Right. And the builders require that. They need that because they need that for their financing. They need to see, the banks need to see that they are working with approved buyers, right? Yeah. It's not just about money in the bank. They want to make sure that whoever's buying is able to actually close and move forward on owning that property.
Absolutely. Right. Yeah.
Yeah, it's huge because, like you guys said, the deposit structures are so easy where it's like, I could do this, but you have to forward think and be like, okay, well, what about that mortgage? Yeah. And that's why when you guys are sending those clients over, I had a discussion with them saying, remember, this is not just right now. In 4 years, so you're going to get married, have more kids, you think your job's going to change, you got to look at what that is, because what a lot of people have to understand is that pre-approval letter now is for today's current state.
Yeah.
And it's good for 120 days, which of course you're going to be going way over with that 3 to 4 years. So it's like, understanding, okay, this is how you have to budget for the next couple of years to ensure that you're on that same track to be on that same trajectory that you are on today to get approved if we were to close tomorrow.
Yeah, and we also have a duty of care to our clients, right? And you do as well. From a compliance standpoint, we can't be taking people down a silver path and dropping them off a cliff somewhere, right?
Yeah.
It's true. We need to make sure that they've done their due diligence, that they are comfortable with buying such an expensive asset.
Yeah.
And you guys so far, with our experience working with you, have been amazing at doing that. Because you cross your T's and you dot your I's. And having someone like yourselves on our side just makes our job a lot easier. We know we can definitely refer, and everything will be handled from start to finish. And if it's not, and if you raise concerns, you're very transparent about that, and then we can communicate that back to our clients.
Right.
Yeah, you guys definitely streamline the process in ways that most people, actually, I don't think anyone else does out there. And we are appreciative of that, because it makes our jobs easier, because you're being in full communication with us, with our clients, and it just creates a whole different experience for them.
Yeah.
Thank you. We
Well, that's
appreciate
awesome.
that, boys.
That's awesome to hear that. And just from our side, like we say with everyone, it's a team effort. You know what I
Right.
mean? We got to be working with you. We're not working against you. Yeah, it's different companies, different areas we're dealing with. But to go to your point, that's why we want to streamline, is to make it easy for the realtor, easy for the client, easy for the broker. If we work all together, it's going to be seamless for sure.
I agree.
And we're in the service business, right? So the clients are making a big transaction here. They deserve that white glove service, and they deserve for us as a team to come together and provide them with that knowledge and provide them with that guidance, right?
Yeah.
Hence not dropping them off at the end of the cliff. I
the
like
edge of
that
a cliff.
analogy. Whoa.
Here, come with me. I want to show you something.
Okay, so why invest in pre-construction in Toronto? What are these builders and developers doing to continue to set the bar or compete with these other world-class cities across the world? Why is it a good choice for investors?
It's a perfect point, Nick. And I think, Toronto is the 4th largest city in North America. We are always compared to other major markets across the globe, right? The developers have a responsibility to build buildings and build homes that can keep up with this trend at the end of the day. So when we look, and for me personally and my team, we just don't work with everyone. We kind of pick builders and projects and developers specifically because of what they're doing in the marketplace and how they are differentiating themselves. And they do this a lot, not only by the locations that they're selecting, but oftentimes things like the architect that they're bringing in to design the building, the designers themselves that they have, putting together your finishes, your amenity spaces, your indoor, outdoor spaces are very important, because that's what differentiates one project that could be on the same street from the next project. And builders are very aware of this, and they're spending a lot of money, they're spending a lot of time on making sure that whatever that product is going to stand the test of time and really kind of continue that forward trend that Toronto is on right now to become a world-class city.
Right.
Yeah, no, absolutely. And just to add to his point too, like immigration is a huge thing. Like COVID stopped that. And now that we are transitioning out of COVID, they're turning that tap back on, and we're going to see a huge influx of immigrants, and they need homes as well. And so developers know that, and they know that these people need homes. So on top of the fact that our population is growing, they also have to get fancy with it too by making sure that, every single demographic has a project that fits their needs, their wants, their styles. And so we're seeing the different types of niches that these builders are taking, whether that be like ultra luxury or, your cookie cutter standard condo that has great entry level prices. They all have their specific marketing tactics that I guess attracts a specific demographic. And that's important in a city like Toronto, where it's so diverse and there's so many different types of people. Whereas maybe some of the other larger cities in North America, you have very similar demographics that are occupying that major city.
If we look at some of those other major markets, Los Angeles, New York, London, Singapore, and if you just look at recent data on a pre-construction price per square foot cost, we are trading right now at such a significant discount that if you are a local buyer or even an international buyer, the value here is incredible.
Yeah.
The value, because we know what Toronto is now. we also know what it's about to become. We are now a tech hub. We are now a banking hub. If you live in Toronto and you invest in Toronto, I would even go further to say as Ontario, just not Toronto. You're here for business. You're here for enterprise. You're here because you're educated, or because you know that there's an opportunity to make money and have a better life for yourself.
Yeah.
You go to some of those other markets, your barrier to entry, that cost per entry is almost impossible for a lot of people unless you're living there in that economy. So that's why the immigration is so strong right now. That's why so many people want to move to Toronto and to Canada, for that matter, of which Toronto is the catch of the majority of immigrants that come to Canada year over year.
Yes.
And so the demand will always be there. We are now in a spot where supply is going to eventually catch up. And I think ultimately, when we can talk about pre-construction and put people in these products now, it's a better end result for everyone involved.
Yeah,
Right.
yeah, and I think the timeline too for when that supply is going to catch up is still far away. We like to hope that it's getting closer, but it just seems like as time goes by, it still seems a little out of reach. So that's actually a great thing for pre-construction buyers, because it gives you more time to still consider projects, buy the products, and reap the benefits that come with pre-construction, because we're still so outsupplied.
Yeah, absolutely. And even just to strengthen the point about the discount, I love that you bring that up, because
Yeah.
everybody always thinks, where we're living, this is expensive. But I was digging, I wanted to do a little bit of research saying, okay, we talk about all the time, the cap rate of these rental properties. So
Right.
well, let's look at New York as an example. And I know everybody laughs about it, but I was looking at areas like Brooklyn, because I saw, $400,000, $500,000 for a 2-bed, 2-bath. Like, that's a steal. But then you look at the maintenance fees, $3,500 US a month.
Wow.
$4,500 US a month. So again, just to go to your point about the discounts, that that price might be, sexy, so to say, but look at all the costs with that. How can you carry and look towards, getting a good rental yield out of that? Whereas here you have top end buildings that have maintenance fees of $400, $500, $700, $900. I still think there's, like you said, that big discount that there's still a lot for Toronto to grow and really grow into.
And you're not getting the square footage at that price
as
too.
well.
You're tiny at that point.
You can get 125 square feet for $1 million in Monaco if you want.
Imagine that.
Sold.
Right?
So,
That's a washroom with the toilet and a shower and a sink and the bed.
or,
All
just,
over the
place.
or Tokyo, I should say. too.
Tokyo,
Very
yeah.
small accommodations in Tokyo.
Yeah.
Yeah, but
That's awesome.
Yeah.
Yeah,
But-
zoom out in
Yeah.
a nutshell, right?
Exactly.
Zoom out and look at all these stats, all this data, and understand what these other world-class cities are being priced at, because we're on our way there.
Yeah.
right?
Yeah.
So, for
Yeah.
sure.
Absolutely. Well, awesome. Thank you so much for your insight today. Again, we really appreciate you guys taking the time to talk with us. And thanks again for tuning to this week's episode of What Would It Cost? We'll see you next week. Coming up on What Would It Cost?
What does that impact look like in regards to driving prices up for when stagers and designers incorporated in their program? What does it look like for when developers and builders come to you and say, we have X amount of budget that we have to allocate towards the art industry?
It absolutely enhances every part of the builder or the real estate. To add art is to add flavor to a meal. I mean, people know right away when they see a piece, is that a Picasso, is that a Triantos?